margin call. So who here, by a show of hands or whatever, dots on a screen, I guess, here on YouTube, who actually knows what the term margin call means? Anybody actually know what it means? Anybody know the origin of the term margin call? Anybody want to give me the origin story? It should be pretty obvious from the word. Okay, so Jan says, okay, so a few people saying they know. Okay, so I'll give you the origin story. It's going to be a long Kevin Explains Crypto this week. So the origin story, it's called margin call because obviously, first of all, margin didn't really come into play until markets went somewhat electronic. There was margin beforehand, but it was handled in a bit of a different way. When margin went electronic, it was a bit of a different story. We didn't have only end of day reports to work off of. People weren't trading on end of day charts. Correct. So a margin call, when you get a margin call, it essentially means that you've used up your available equity has now basically zeroed out in comparison to the amount of exposure you have on the market. That doesn't necessarily mean that you're getting stopped out. A margin call should always happen before stop out. Before there should be a buffer zone. And the margin call is basically to alert you, hey buddy, by the way, if you don't add in more margin or close some of that exposure very shortly, you will get stopped out. It's called margin call because as we got into the initial parts of electronic trading, the broker used to call you and you would get a phone call. While broker would say, buddy, we need more money. And that's why it's called the margin call. Yeah, that's it. Margin call basically is you are at a point where if within X amount of time you don't fund your account, you will be stopped out. If you've already been stopped out, that's not a margin call, that's a stop out. If your positions are closed, you got a margin call sometime ago, sometime before, and now you're just stopped out.